Thursday, the 18th of May, so we're halfway through the month, or well over halfway through the month. So far today, not a great deal of data today. We've had some good, interesting final earnings coming through. Walmart earlier on. We also had some good numbers from Alibaba as well. So the earnings season's coming to an end. They've all seem to have outperformed again. We've got about a 78% beat on the expectations for the USA 500 overall. So it's come out better than expected. We're just getting the main data of the day. Let me share my my calendar with you. The weekly claims. Cable has been our biggest mover so far today, and we're down at around about 124.37 at the moment. Claims is coming better than expected at 242,000. Let me just share my screen with you. There we go. So weekly claims this week, 10,000 better than last month, 242,000. Against the 264,000. Remember, we've been trending higher for a few weeks now. Continuing claims just under 1.8 million. So that's been a big sticking number for the continuing claims number. We're under 1.8 million now. And the other key number this morning, also better than expected, is the Philly Fed Manufacturing Index coming negative 10.4 compared to minus 31.3 for April, and an expected minus 19.8, so minus 20. It's coming at 10. It was 30 basically, so it's a big. I say it is a big volatile number. These manufacturing surveys, and they've been chopping around all over the place. This morning we had the band of men, gentlemen, which they still are, the MPC guys reporting to the UK Parliament. And continue to say inflation is persistent. It's unfair to claim money printing as causing inflation, and that jobs wage settlements starting to tick up in the UK are adding to the inflation pressures. It's all a bit after the event, really. Actually, to be honest, I didn't see what Miss Lagarde had to say earlier on today, but anybody can enlighten me on that, I'd appreciate it. But so key data of the day: US initial claims 242,000. So we're back down again. This is about average, really, for a normal economic cycle: 240,000, 250,000, 260,000, that sort of window. Anything under 200,000 is a very, very, very tight US jobs market, and that's where it's been for many, many months post-pandemic. So it's still tight. Things are still in focus, but there's stuff to be taken by the bears. There's stuff to be taken by the bulls. There's the soft landing, the no landing of the economy, the hard landing. There's still data around to support all of those suggestions at the moment. But at the moment, we grind high as far as stocks are concerned. So the dollar having been, this is the, sorry, just put that right there. Let me just see what you guys can see. Where are we? There we are. The dollar has improved. This is our biggest mover of the day, the cable. This is the pound against the US dollar. This is the 5-minute chart. And we're down to test yesterday's lows down here at 124.20 level. So dollar continues to move higher this week. That's cable. And welcome everyone. Hope you're well. It's Thursday afternoon, and first off is Abba asking about gold. Good morning, or good afternoon, good evening, good morning, Abba. I guess you're in the you're in the Caribbean or somewhere in Latin America. I don't know. So this is the 1 hour chart for gold. It continues to third day down now. Here we were sideways here. On Monday, Tuesday down quite significantly, down again yesterday. And obviously, Tuesday we brought that key 2,000 level into test 1975 yesterday. We bounced off that into close. We held about 1980. What a year that was, 1980. Anyway, story for another day. And we're back under 1975. 1975 was also quite an interesting year, if I remember rightly. And we're back to 1968 now. The 1968, was that the Mexico Olympics? 1968, I think it was the first flop, wasn't it? 1968. 1969 was Woodstock. We're back to 1969 now. But anyway, my frippery needs to stop. We're trending lower, basically. Aber Prince, my friend. Big current hour down candle under 1975. So psychologically, 1975 is becoming our resistance for the rest of the day here. So if you look at our 15-minute chart, it's been ticking sideways. Big move down on the data. Dollar stronger. And we move down under 1970 as well at the moment. So continuing to trend lower here on the 15-minute time frame. 5 minutes, much more exaggerated, as you can see there. We've been as low as, so this is possibly a new low for the week. We'll have a look in a minute. 1967.25 we've tested into it. I'll just put that on. Object list. Let's make that a low for the day. I'll put that on as a what's the color I use? I use orange red to mark the low of the day, and that's that layer there. 1967.25 is where we are at the moment. So we zoom in, you can see. Close. Let me just get rid of that. So gold continuing to move low, and that was our low here yesterday. Actually, it wasn't the low yesterday, was it? Oh, it was 1975. It was our low yesterday, that blue dotted line. So you see we've been moving down here on the smaller 5-minute time frame. So it's still biased to the downside. Obviously, the question is, where do we go from here? Well, if we go up to the higher time frame, go up to the hour time frame, you say, well, it's trending lower. We look to the left. When were we last down here at 1970? Well, it was here on the 19th of April. Can you see that there? Zoom it up a bit. I'll scroll that in a wee bit. If I go up to, let me take you to the 4-hour time frame. See, there's that 1975, big psychological round number. Tested it a few times here on the 25th, 24th, but the spike low was here on that 18th there, and that's where we've been into now. See how we bounced off that on the 4-hour time frame. Let's zoom that up. We bounced off that very aggressively there on the 19th of April here. Much more of a marked decline, isn't it? See how the candles are all similar sort of size, similar sort of body length. There's a bit of length on the wick on that candle there from yesterday around about 4 o'clock. But we've been moving lower ever since, and sort of 1975 is given way so far. And we're under this low. But obviously this is a 4-hour candle, and we can't, you can't really use this candle we're currently using for another 25 minutes till the candle's complete. So if we go back a candle, the trend is still very much set, and it's been very much set from the break of the 20 period moving average up here. Tweezer top, rejection of 2020 here, and that took us all the way back to the 15th at the 8 o'clock candle, or 2000 hours candle. You see we've been trending low ever since. So it's all about time frames, Albert. But today it's lower on the 1 hour, it's lower on the 15-minute time frame, and it's certainly low on that 5-minute time frame. Big reaction to the American jobs data, which is coming a bit stronger than expected. The weekly claims coming in at 242,000, and the continuing claims finally under 1.8 million. So it's relatively good news. Emirates, good afternoon. Sylvester, good afternoon. Let's rock. Hello, my friend. Good afternoon. Let me just go back to the first chart I had up here, which is our biggest mover of the main crosses today, which is cable sterling. It's reversed quite significantly. If you look at the daily time frame, you see we'd been going up really strongly here during March and April, most of May. Now we had this big negative candle here. You see this big down. See the body of the candle there on that day there, right into the 21 EMA. So we'd been above that 21 EMA from this big rally from the middle of March. So March, April, first half of May, then another big bodied candle. See how big the size of that candle is? Didn't break the key moving average. We bounced below it, we bounced above it, we bounced below it, we bounced below it, and now we've moved lower yesterday significantly to test 124.20, and now we've got at the current state of the candle today, we still have it's big move negative, big red candle down. So it's our biggest mover to the downside today. Cable under its 21-day moving average now for 1, 2, and it's into its third day. Remember, this trends can run and run. Like we ran down here for all of February and half of March or beginning of March before we turned higher. We then ran higher for the rest of March, April, and the beginning of May. And now here, the mid-May, we've turned lower. Currently, it's difficult to say if this is going to break down completely, but 124.20 is where we sit at the moment. Support cable being our biggest mover of the day. Euro, also following the stronger dollar, we've seen Euro slip down the last 3 days. So from a rally into 109 on Tuesday, we were down yesterday under 108.50, which had been our support, into close on Friday last week. So we descended all of last week. The low for the week was the low of the close. That was always quite negative. We bounced a wee bit from that on Monday, but we couldn't really move any much higher on Monday. Rallied a whole 50 points from Monday through to Tuesday's high, but then we turned around. So it took a day and a half to run for 50 pips. We then reversed that 50 pips very aggressively within the space of a day, and now we've moved a whole leg lower, and we're under 108 at the moment, 107.95. So from 108 close on Friday, we're now down to 108 and under 108. So again, another one that's continuing to trend low. As you can see, the 20-hour moving averages kept you the right side of this move. From a flat, we're not in it, to underneath, we're short, we're still short, out, and then short again, and then short again today as we moved down. So Euro biased to the downside. Where do we go from here? Well, let's have a look what the daily time frame is telling us. Well, the daily traders, end of day traders, again, a bit like that cable chart we had a minute ago, turned from a long position to a short position here on the 9th of May, and they've been short ever since. Bit of a retrace. So 110 was the big breach for end of day traders, and they're still very much in the money. 200 pips later, down here at 108. Where's the next support level? Well, the one that comes in here on my chart here on an end of day basis is here at 107.75, 107, in fact 107.50. Sorry, 107.50s next to support zone for the Euro on an end of day basis. But there's been some big negative red candles, and you can see the momentum so far on an end of day basis. See how the body of the candle has got bigger from Tuesday, Wednesday, Thursday. That's not that unusual given the time of the week or the days of the week, but we've got a bigger move lower. See how today pans out. Can't make a decision on. I can't make any trading decisions on that. But end of day traders are not really bothered because they've been short from up here at 109.60 from the break of 110. And they're still in the money and pips to spare on the side. So potential adding to that short position today if that candle continues to move to the downside. Good afternoon, Olial. Hope you're well. Mohammed, good afternoon, sir. Hope you're well. Gold going up to 2020 long term. Well, you're always obviously a long. The numbers you put in, Mohammed, are always interesting. They're always a long way from where we are currently. So we currently trade around 1970 for gold. If we look at 2020 again, do you mean 2020 or 2000? Do you actually mean 2,200? Let me. What you said? Long time. You said, well, 2,200 is where, isn't it? Let me guess you've meant 2020, Mohammed, because that was the big break from earlier this month. So yes, we could certainly get back there, and obviously we've been as high as 28. If you do actually mean 2,200, let me just put that on this chart. It's obviously 22. Let me put that on there. List. I'll leave it as I'll leave it with these orange lines. 2,200, obviously a long way from where we are currently, but certainly nothing's out of the question. Remember, with markets, they do what they do. We'd need a substantially weaker dollar to get anywhere. If we got the weekly chart close, if we go up to the monthly chart, you can see what a bit of a stretch that is. So 2020 all-time high, 2,200. Sorry, all-time high, 2,200. This is the monthly chart, remember? So there's a long way to go before we can get there. But if the trend holds here, which here it has here, this is the monthly chart. Remember, 1850 is the big support, and we're currently trading at 1970. So nothing's out of the question, but it needs to break out of this all-time high range here, break 2050, break 2100 obviously first, if it's going to go that way. But yeah, we'll see. We'd need a significantly weaker dollar, and it is a long time and a long way away. Sylvester Godfrey is saying, gold, goodbye. Well, let's come back to today's range, Godfrey. No, is it a goodbye? Why? Just because it's been going down? Lots of people get sucked into that, thinking, well, it's gone low, it's got to bounce up. No, it doesn't. Momentum can run and run and run, Godfrey. Just because something's low doesn't mean it's good value or it's cheap. It's not like I don't know. It's not like a pint of milk or a loaf of bread or a kilo of rice. Markets are not really like that. Yes, these are historical levels and prices that have been used before. But just because it's been down for the last 3 days doesn't mean it's going to go back up for 3 days. At the moment the trend is down. We're at 1970. And again, it all depends on the time frame that you're trading. But if you're trading in the shorter time frames, as many of you are, and again, if you go right back down to say the tick chart, the 1 minute chart, we've been. This is the one. Remember, this is not as low as we go, but this is the 1 minute chart. So it was moving higher here before lunchtime. It's been moving lower since lunchtime. Big move, as you might expect, on the data here at 15:30. So the 17 candles since then initially moved lower. We've created this low of the day at 1967.25. In the last couple of minutes, we've ticked back over our 20-minute moving average, but we're just sort of playing with it. It doesn't really want to break through. Up, down, and up, down again. So still sort of biased to the downside, but it's all about time frames. If you'd seen this, if you'd been testing, if you'd watched this on the 1 minute chart, you would have seen this low forming here, this platform here, which we'd put in before. And so we moved up. But how much further is it going to go up? Well, it's not going to retrace all of the news movement lower currently. I mean, it may do eventually, but we're only 18 minutes since the data has come out. But to move higher again, the low before the data came out was here at 1973.21. Can you see that? See that level there? 1973. Let's put that in. So that's where you need to get. If this is going to turn long on this particular one time frame. Remember, it's all relative. It's all relative to what you're trading. So 1973 needs to break to the upside if gold is going to go back to where it was before the data came out, the relatively strong US data, jobs picking up. So it's down. It's formed this new low, which is the downside target now, 1967.25, and the upside to break long. Needs to hold over this 20-minute moving average, which is now back under, just while I've been speaking, and then 1973. So the initial here on this 1 minute time frame, 1970 needs to break to the upside. It tried it for a couple of minutes, it didn't work out, and now we're moving back down to test this earlier low of the day, which we got once, twice, 3 times, 4 times as the day in response to the data. Okay, so we're still biased to the downsides. Godfrey, I hope you can see that there. Okay. Sorry for being late. Hey, everyone. Simon, good afternoon. Good afternoon. Could you please analyze pound cable from the daily chart down to the 1 hour chart, please? And I would like to say thank you for your constant objective views. It's what they pay me for, Teal, my friend. I hope you're well. There we are. So as literally gold traders, we spiked another new low of the day. So this 1967.25 level post data has now been moved lower again to 1966.24. 1966. What a year that was for us English people. I'm sure you know what I'm referring to. But anyway, 1966. It was a bit above that, wasn't it? 1966.25 is our low for the day at the moment. Teal, we just did cable, but let's do it again. You've asked for the whole range, which is fair enough. Daily chart down to the 1 hour chart. So let's just do this as we would. So the daily time frame is now short. It's under its 20 on this particular setup. Okay, it's under its 21 exponential moving average chart. And it has been since a few days last week, basically. It retraced a wee bit, but it's short, and we're down here at 124.20. So that's short. So the 4 hour trend is also lower. So it's moving lower, testing 124.20 again at the moment. So we've gone down, retraced, held the 21, gone down again. See how the low here is lower than that low is lower than that low. So that's the break of our key moving average. We retraced into it, couldn't break away from it, broke back down away from it. Another big candle down, retraced with two quite good strong candles up. Looked like it was going to go, but it was just a weak break. We couldn't get to 125.05, so we couldn't break that key psychological 125 level, and then we've rejected it. Tweezer top. Well, it's not tweezer top actually. That's not correct. But breached that low. Big candle down. Our previous 4 hour candle, and here we are in the current 4 hour candle. Again, we can't use that for any analysis, but we're moving low. Volumes are ticking up and down, ticking up. So 124 becomes the next key support area on the 4 hour time frame. And as far as your 1 hour time frame is concerned, Teal, it's been quite sticky, to be honest. Yesterday we were down, then it looked like we were going long late yesterday afternoon, but we ran into this 125.05 area. I don't know why I haven't got the 125 level on there. I thought I did have. It must be a different chart. Let me put that on. So I must have a different cable chart on. Sorry, I had a blue. Trouble with doing these things live. 125. 1.25. Guess that's that key. Big psychological level 125 sterling. So there we are. There's that run yesterday, and it's been a lot short from this morning. Really, it was a very weak break here at whatever time that was, 7 o'clock this morning. But 8 o'clock, and then we breached here 124.65, which is a level I've got on my chart, and it's usually on there for a reason. So that I would have added to that there on that break of that 124.65 this morning, and then you can see here where we've gone down, and this might even be adding at the lows of the day. But obviously, trading intraday, you might be looking to capture a bounce from there. But we've now got a new low for the week, 15-day low, 16-day low now, Teal here on this 1 hour chart. If I zoom in, if we go up to the daily time frame, you see here, look, 124.20. That's 16 days we were. This candle here, 16 days. So what was the low of that day? Well, that took us to 124.03. So 124 is certainly dragging cable toward it at the moment on the data that we've seen so far. So that's cable. Can you please be specific on Euro USD? When will the long side stop? Chimos, you can't, Marines, you can't have that mindset, or you can have that mindset, but you need to change it, okay? You just got to trade what you see. And if you're a trend following trader, is that your style? Is that your sort of personality? If not, are you a sort of, what time frame fits your personality? You can still be a trend following strategist on all time frames, and that's the beauty of technical analysis. So here, as I say, the daily trade was down, then it was long, and now it's down. Okay, But these guys, the guys that trade at the end of the day, will be taking very few trades. They'll be trading when these big significant levels are broken or come to an end, and they stay in positions for a long time, and they add to positions as their trend moves. If, on the other hand, we go down to the 5-minute chart, you can still have lots of trends, but they move less. They look like big long moves, but this was. And again, the beauty of technical analysis is this same green line, this same green indicator is just counting candles. It doesn't matter that this candle is only 1 minute. It could be 1 month, like we saw on the other one. It was a day. So all they're doing is counting what it's saying. And all this green line is showing you is the average over the last 21 candles. And at the moment, because of the strong data for the dollar at 3:30 this afternoon, that bias to the downside, which it's had all day, or not all day, all day here. Sorry, that's the beginning of the day, isn't it? All the European session, we've been south of this line, haven't we? We were over there for a minute or two, and then we went under it. We were over there for 3 minutes, 4 minutes, and then we went. So here, the moving average isn't in play because it's flat, as you might expect ahead of the main data of the day. The main data of the day has come out here at 3:30. We've broken. We're significantly below our 21 minute average, aren't we? We've broken a key psychological level, 108, a big round number. And ever since then, 1, 2, 3, 4, 5. This is 5-minute chart. Sorry, no, I'm saying it's 1 minute. It's not 5 minutes. So for the 25 minutes since the data's come out, we've been under 108, and we're still biased to the downside, aren't we? Why do I say that? Well, because the candles, the body of the candle of each of these time frames is bigger negatively than it is positively. We've had 3 negative candles, and the biggest of the negative candles is by far the biggest of all the 5 candles we have, haven't we? So we're still biased negatively. So when will the long side stop? I'm not quite sure what you mean the long side stop. It's, again, I don't know what time frame you're trading, but it's, euro dollar is short on the daily time frame. It's short on the 4-hour time frame, and it's short on the 1-hour time frame, as you can see there. Okay. Daniel, what do you suggest for gold on the 30 minute, 15 minute? Well, what do you think, Daniel? What do you think's happening? Daniel, you tell me. You tell me. So that's the 30-minute time frame. What would you do, Daniel? What is that chart telling you? Or what is that? What can you see on that chart? Daniel, or anybody for that matter? Don't be shy, Daniel. It's negative, isn't it? Of course it's negative, yes, because we're going down, aren't we? Take the green line off, take the moving average off. What's been happening over the last 3 days? We've been going lower, haven't we? The price, it's the price, which is where we are now, all the way down here. It's whatever it is now. Where are we? Here we are. 1967.75. The price, the numbers are getting smaller, aren't they? So we're biased to the downside. So if I was trading this on the 30-minute time frame, I'd be looking to take short positions. However, I can't use this if I'm trading the 30-minute time frame. I can't trade this yet because it hasn't finished. It's still got a minute to go. It's got a minute to complete. It looks like it's going to be a big negative candle, doesn't it? But, never rule anything out. Daniel, yeah, absolutely, downtrend. You can't rule anything out because it could suddenly turn around the last minute of the candle time frame. And I've seen that happen before, and I've seen it happen many times now. It'll happen many other times. But you can clearly see this blue dotted line here, a big round number again at 1975. 5s and 0s are significant. But this is a big volume candle. See the big candle? Sorry, the spike here on the histogram. The body of the candle is very, very big, so that's short. What would happen? What normally happens now to normal people or non-traders is to think, well, that's the low of the day. It's the low of many, many days, and it can't go any lower because it's already at a low. That isn't the case. the stochastic here, this oscillator, it's in one of the lines here is in an oversold zone. However, the key D line, the signal line, hasn't actually moved low. It still has got some way to move low. It may turn up, may not, but there's still some momentum potentially to the downside. I haven't got any other indicators telling me, but look, big volume on a big down candle. There may be some buyers down here at 1970. They haven't actually come in at 1970 because we're still going lower. So that 30-minute is biased low. So if the 30 minutes biased low, the 15-minute, Daniel, will be even more exaggerated to the downside. And there we go. So that was yesterday. Again, biased to the downside. We closed lower than we opened the day. And at the moment, we're much lower than we were on the open today, under 1975, and currently trading at 1967. So, what's the next big thing that could move this market today? Well, there's a speech by a member of the Fed at 4 o'clock, or just after 4 o'clock. Friday at 5 o'clock server time, we got some other housing data, which has been a bit also showing signs of weakness. So we got existing home sales data from the United States at 5 o'clock. We got some talk from the Bank of Canada also at 5 o'clock. Would that impact the gold market? Yes, it could, because Canadian dollar is a commodity currency, so it's inherently sort of linked to commodities, although it's not directly linked to commodities. And some Treasury notices from the United States government later on in the day. So not a great deal to directly correlate to the gold market, but obviously all of that data will have an impact on the dollar, and that's what's on the other side of this trade. Remember, you're trading the dollar gold price in US dollars. So if the US dollar is getting stronger generally, which it has done today, this price will be put pressure on it to the downside. So again, another bias to the downside. Or teal, because it's negative, I wait for price to confirm previous support as resistance and continue to sell to new support. That's a strategy of teal. That's definitely what many traders do. But again, it's all about it's about time frames. It's about how long, what your target level is. Are you in it just for the day? Are you in it just for a few minutes? Are you a scalper? Are you a swing trader looking for the next turn? Or are you like an end-of-day trader here on the gold market, which only went under its 21, this same indicator, the 21 exponential moving average here this week on Tuesday, the close of the market on Tuesday here, as it went under 2,000. So we went long here as it went over 2,000, went all the way intraday to 2,078, 79, which is a smidge shy of 2080. Before it then cooled and turned short here on Tuesday, and we're under 1975. But as you can see here on an end of day basis, how significant that 1975 level is. So all the wicks of those days towards the end of April, key support area 1975, but our candle today is so far below that key level. So see how this candle on an end of day basis closes. So that's biased lower and has been since Tuesday. The 4-hour time frame also lower since Tuesday here. That big down candle there on the is that 4 hour? That's much before that. Yeah, it's been really biased low before that. That's the 11th of May. So last week there was a retrace into this area here on Tuesday. Then we last went short here on Tuesday, and then that big candle down here yesterday. Not yesterday. That was what am I talking about? That was Tuesday. This is earlier in the week, wasn't it? 15th. So there's that big 4-hour negative candle there from Tuesday, and we've breached below that, and we're still moving lower. And there you can see that there's that. You see on the 4-hour time frame how significant that 1975 level is. Mm-hmm. So there we go. Downtrend, as you said, and there's your 1 hour. There's your 30-minute, and there's the other one you were talking about, your 15-minute. So all of them in unison. So you're with the trend, taking it. Obviously, we go down to the 1 minute and the 5 minute. It might be a bit choppier, but even here on the 5 minute, because of the data, we haven't turned around. We haven't been over our 21 period moving average on our 5-minute chart since when we were last time over that for any significance. There we go. At 1:45, we're now at 4:05. So the last 2 and a bit hours, we've been certainly biased negatively for the gold market. The data at 3:30 was the big oomph to take us lower. We tried to retrace 5 minutes in, but then we went lower again. And many people, 5-minute traders would have taken that short there, would have added to their short there at 15:45 because we've got this new low of the day under the previous one we were talking about for 1967. And here we are now under 1966. 1965 even. So you pay as your money, you takes your choice, but you've got to, guys, you've got to trade a time frame that fits you and fits your personality. There's no point in, trying to trade the 1 minute or the 5-minute time frame if you can't be flexible enough to change your mind. You can't get set with a position. You can't just hang on to it forever. Similarly, if you're trading an end of day trend, you've got to have some sort of idea about when you're going to get out. And the most important thing to know about when you get out is when you've lost, 1 or 2% of your entire account on this particular trade. I'm getting out. I've lost enough. You can get back in. Certainly you can get back in. You can trade another market. Of course, you can trade another market. But if you keep your losses to 1 or 2% of your account, you live to fight another day and you live to keep your account alive. I'm not saying you won't blow your account if you every trade you take, you lose. When you lose 2%. You might still eventually blow your account, but you'll get an awful lot of live trades before you do, and you'll learn a lot about yourself. You'll learn a lot about trading, and you'll learn a lot about the assets that you're trading. Because again, a lot of people jump into this business without due consideration about what it is they're actually trading. What is a CFD? What is the spread on this product? What does the broker want as far as margin on this product? How much is he charging me for keeping this trade open overnight? How much is he charging me for swapping my, Nigerian naira into US dollars if I'm trading a dollar account? Can I trade with Nigerian naira? Can I have a Nigerian naira account? Can I have a rand account with my broker? All those sort of questions you need to understand and appreciate before you risk any of your hard-earned money, my friends. Okay, Daniel, absolutely, it's in a downtrend. Of course it is, and we continue to move lower. I mean in euros. When will a short pressure ease? When will a short pressure ease off on the euro? Who knows? Who cares in a sense, Chimozi? If I'm guessing you've got I don't know. I'm guessing you're out of the money and you've got a trade that's long. So it's. I mean the sentiment has turned. So if we go, why do I say that? Because let me show you. Why do I say that? Look, the trend was very much for the euro here for the early part of spring. For March, April, we were long, weren't we? It was going long. It was above this key green line. We topped up here. We went to 110. We were over 110, 110.50, 110.80, 110.92, 110.98. We got within a smidge. We got with 2 pips of 111, 1.1100. It didn't happen. We hung on to 110 for a while, and then we breached 110, and we breached our green line, our 21 EMA here on the 9th of May. And so that long trend has turned. It's now short. So when will short pressure ease off? Who knows? Who cares in a sense, Chimosi? As a trend following trade, you stay in the position. I've been long for a very long time. Well, that's the problem, you see, Chimosi, my friend. Sorry, I hope you don't mind me showing this in public, but that's the problem, or what a part of the problem, okay? Because you've got subconsciously and now consciously, because you've written this down, you've told the world that you've been long for a very long period of time. It's good in a sense because you're admitting publicly that you're hurting because you're out of the money and you're losing money. But the trend, there's no sign of that trend ending at the moment. What would happen is, it might end here at 108. It might not. It might end at 107.50. It might not. It might end at 107. Who knows? But you're obviously hurting too much and you're perhaps losing too much, to admit that you were wrong and you couldn't close a trade. That's why trading with a stop loss and trading with a take profit takes a lot of the pain away, because you've made the decision before you open the trade where you want it to go and how much money you're prepared to lose. Chimozi, if you're losing more than 1 or 2% of your account, the logical thing is just to accept it and close it and get on with it and move on. Too many failing traders can't accept that, don't do that, and end up blowing their account and never coming back to trading. And it's a shame, because lots and lots of people can be successful traders. And lots of people have successful trades and make lots of winning trades. The trouble is they don't make enough on their winning trades to counteract their losing trades. And that is the simplicity of trading. Keep the losses small, and you live to fight another day. If you're letting it get too big and eat away at you, it's very difficult to get up from that emotionally and psychologically. So, Anyway, so 108. It's been breached so far today, not strongly but weakly. I'll see where we go from here, but under 108. Euro moving lower and continues to look that way. Let's have a quick look at gold again. Gold, where are we? Well, we're still bouncing. We're still, since we were last here, we've pushed another new low for the day at 1965.30. 1965.35. Still, even in this 1 minute, it's still biased to the time frame. So see how it's another good example of how volume can keep on your side. See how there wasn't a lot of volume to support the direction we were moving in, did we, before the data? So this is the key data, or one of the key data sets of the day, the US unemployment numbers. Let me just retract that for those of you who just joined us. I've got it here. The US, there we are. US unemployment data for the week was better than expected. It came in at 242,000 compared to 254,000 expected by the markets, and which was 10,000 less than last week's big jump up to 264,000 from 245,000. So we're back to that 245 area. And also the continuing claims for the week of the 5th of May finally ticked under the 1.8 million. So jobs market continues to remain hot. Excuse me. So that's adding to the pressure of the Fed perhaps having to move again. With its interest rate high, or certainly keeping rates higher for longer, which is what many have been saying for a long time. But have they finished? That's still not raising rates. That's still not categorically nailed on. We'll only find out when it actually happens, obviously. Gold here continues to move lower. Orteal, yes, you're right. Operational costs of trading are very important things. Thing is, we as people only go back and do the research once we have lost our accounts due to fear and greed. Absolutely. Orteal, that's why I'm here. That's why I do this. I'm trying to share my experiences of trading and investing to try and prevent people from doing this sort of thing. But people we're very stubborn beasts wherever we are from the world. It's just the way we're built as human beings, and we tend to have to test things, have to do things and see things for ourselves, have to lose our own money before we realize, these guys, this market is right. All these guys on YouTube are actually right, but I've got to do it myself anyway. Which is why most traders fail, unfortunately. But many people, fail and then don't come back. Fear and greed are the two fundamental things that drive us as human beings. and more so when we throw money into the pie, which is what trading is, isn't it? So when we add money to the game, what's the word? The accumulation of money and the retention of money just adds to that fear and greed. And that's what drives markets. So again, using this gold chart as an example, many people would see this big down candle here in the 5-minute trade. They see this big down candle here after the data come out. Oh, well, it's got to bounce up because it's moved all the way down, so it's bound to move. And it did a little bit, didn't it? 10 minutes later, and some people might have made some money as that's gone up, but the bias is still to the downside, isn't it? So, and here we go. That new low, that low we talked of 10 minutes ago continues to get pushed lower. So we're now at 19.62.24. We might find some support here. Who knows? But the bias is still to the downside. And again, look at the candles here on this 5-minute chart. The red candles, the bodies of the red candles are bigger than the bodies of the green candles, aren't they? Overall, so we're still biased to the low. So what sellers might be doing now is pushing it as far. How low can we get this before we start to see some buyers? Well, at the moment, we don't know. It may be it. That they cut this low, 1962.21, but we don't know. Let's see what happens. So again, it is. You're absolutely right. And again, the other thing, when you talk about operational costs, Teal, as well, remember, see the spread here on the gold chart here. It's very, very tight here on our 5-minute time frame. But that spread is your cost of trading, your operational costs, if you like, Teal. So that cost, that distance there between buying and selling, these two lines here, that's the same as if you were trading on a daily time frame. There we are. Let me zoom that up. See there's our, you can't really see it on the daily time frame now because it's so tight, it's so narrow. But look, so the cost of taking the trade as a percentage of your account or the percentage of your pip target is much, much smaller on the higher time frames. Remember that the spread is it's a fixed thing. It happens on all markets and all time frames. So you can hardly see the spread there, can you? It's lost on the daily time frame. We bring it down to the 30-minute. You can just about see it on the 30-minute. And here on the 5-minute, there, it's a bit more substantial on the 5-minute. You can see the difference there. But that's the difference between buying and selling. That's your cost of that's your operational cost, as you call it, Teal. So, yeah, that's key as well. You're absolutely right, my friend. Yeah, and the funny thing about all this is the fact that it's all in our, absolutely, the moment we fix our mindset, everything changes. Very good, Teal. I hope you've watched my webinars and you've been listening to stuff I've been saying over the years, but absolutely, this business, ladies and gentlemen, is a mindset. And normally at this point, I would pick up my Trading the Zone book by Mr. Mark Douglas, which I haven't got here. I must have taken it home, and recommend that for getting your mindset right. It's 100, well, not 100%, 90% plus. This business is a mindset business, and that's why you all should watch my trading, how to improve your trading mindset, the webinar. Let me just show it here. This is our webinar site, and if you haven't seen it before, this hasn't changed for years. This webinar because markets haven't changed, but the one I argue is the most significant of all the webinars we do is this one here: how to improve your trading mindset. A few simple numbers show you the importance of emotional control and maintaining your discipline. Those old boring. Sorry, looking at me, not this one here. How to improve your trading mindset. If you haven't listened to it or watched it or seen it, I sincerely implore you to do so, because it is a mindset and it's a mind game business. Teal, you're absolutely right. Simon, yeah, he's talking a lot, or she's talking a lot of sense. Absolutely. Why can't I reset my password? Can you? I don't know, my friend. Come to our website. If I come to our website, the quickest thing to do, Kaya, is come to the website and click on the chat box here. Can you see that? You can't see it because it's behind my head. Click on the chat box, put that in, and somebody will get hold of you. Okay. Somebody will respond to you either live or send you an email. Okay. Did you see that? Can you see it? I can't. Let me move it. There, this thing here on our website. So hfm.com, click on the box, key in your email and your account ID, and somebody will get back to you straight away. Okay? But you should be able to. If you don't want to do that, on our tools page here, there's lots of how-to webinar videos here. So how-to videos here, hiya, and it should tell you there how. Oh, hang on a minute. Let's download. Where's the how-to password? Download how to change a trader's password. There we are. Watch that one there. Orteil, you're absolutely right. It is absolute pure gold. How did you, Orteil? You obviously read the book. How did you find the questionnaires, the 30 questions? Did you do, as many people don't, but did you do the questionnaire before you read the book and then do it again at the end, or did you just read the book? Let me know. I'm fascinated because it's, I've read that book 20 odd years ago, nearly 30. It must have been 30 years ago now. For the first time, and it really, really opened my eyes. Can you add the link, please? Orteil, do you mean to the book? Or let me find it on Amazon.com. You haven't got Amazon.com? Amazon. Let me see. Trading zone. All right, Mr. Mark Douglas. As you can see, it's it's paperback. I've only ever got hardbacks, paperback, audiobook in Spanish. There we go. Any Spanish speakers? Audiobook, used books. It's it's absolutely priceless. It was 2000. 2000. It was published. This one. I got his first one. This one here, the Disciplined Trader. When I first started, this one's the Disciplined Trader is much drier and more difficult to read. Trading in the Zone has got those 30 questions in the front of it, and I think I'm on commission here. I'm not. It's all of those books I've read and got, except Live on Margin. I don't know that one, Mr. Nicole Kelly, but I'd recommend it. These three here. This one, Trading in the Zone, The Market Wizards, and Reminiscence of a Stop Operator are my 3 all-time favorite trading books. If you read and digest the stories of these 3 books, it'll go a long way to cracking your trading mindset. Huge way to creating mindset. And the final one here, I've also got Anna Cooling's complete work to volume price analysis. That's the next level. That's a strategy and a system using volume. Very nice lady and her husband, David Cooling. Run annacooling.com. Anyway, enough about books. What's our gold chart doing? Well, it's bounced a wee bit, hasn't it, here on our 5-minute time frame? So we've got a bit of a big green candle at the moment. So is that what you wanted, Orteil? I suggest, what's you saying here? I suggest if you can be using Zoom for this live session. Taniji, why do you say we should be using Zoom? Tijani, I'm interested in your comment. This is Restream basically, rebroadcasting on our channels, our Facebook, YouTube. I was going to say TikTok, but we haven't got a TikTok channel at the moment, and LinkedIn. Orteil, yes, I honestly did it before and after. I had to be honest with myself in order to take in the information. I was talking about mindset webinars. Absolutely. Yeah. All right. Okay. Oh, the link to the mindset webinars. Yes. Sorry, I thought I put that on there, didn't I? Did I not? Let me show you. So we've relaunched our website. We've reduced the number of tabs on the top of the web page. So we've got 5 instead of 9. So our webinars sit here under the Tools and Education main tab. Okay, so we do these at least 3 times a week. These are live webinars, either teaching a particular asset. So next one up is currently running the stochastic oscillator with Otto is actually running that now. Next one is Andrea next Tuesday with a really quite an in-depth market basics webinar. It's one of 2. There's 2 parts to this. The first one Andrea will run next Tuesday. Anyway, that's what's coming up, and we've just put our June schedule together, so it's too late to offer topics for June, but certainly for July, we'd be happy to take requests. All the webinars are recorded and up on our YouTube site and our main website here. So, Orteil, to answer your question, this is the one I'm talking about: how to improve your trading mindset. So you can listen to it. Obviously, it's better to actually watch the thing, but you need to log into your account. I haven't got a live account on this particular workstation at the moment, but that's the one I'm talking about: how to improve your trading mindset. All about risk management and money management, the difference between the two, but all about the things of discipline, patience, all that sort of stuff. Okay. So there we go. Where was I? Right. What am I doing? I've got the charts up. Right. If there's no more requests for charts, ladies and gentlemen, I'll call it a day. Which it doesn't look like. So let me just leave you with the key news of the day. We've got a better than expected jobs number. Let me quickly run through some of the charts we've got on here. The NASDAQ here on the 5-minute, again, it's biased to the downside. It can't get over its 21 moving average at 13,610. We're at 13,605 at the moment. We put a low pre-market. Remember, the market hasn't actually opened yet. So our pre-market low was all the way down here at 13,582. Our high pre-market today has been up there at 13,638. And we're sort of about halfway between, aren't we, at the moment, between the high and the low of the pre-market. Obviously, market hasn't opened. I say we've had some good numbers from Alibaba. We had some good numbers from Walmart as well. The last of the big, many people, me included, talk about the Walmart marking the end of because it's a W from because it's a W, it's the end of the earnings season. It's not quite the end of the earnings season. There are still some key companies, some big companies to report, but most of them have now reported out of the USA 500. And here you can see the tech stocks, the NASDAQ 100 being the big driver. And we're so far today, we're about halfway between our high and low pre-market. But anyway, what else might we want to have a look at? Yeah, let's Euro continues to drift lower. We're at 107.88 at the moment, 107.89, 88. So we're continuing to tick lower today for dollar, euro, dollar. Sterling having pushed, got the 15-minute chart, having pushed as low as, what have we got to today? 124, what was our low so far today? 124.13. We bounced a wee bit off that. We continue to grind at low. Not oil, but gold. On the 5-minute chart, another new low. So we may find some supporters at 1960, but it doesn't look quite like it at the moment. So we're trading at 1960.14. So if there's no more requests, I will leave you all in peace. I've been here an hour already. So take care. Trade carefully, my friends. And somebody just talked about the yen. Somebody just talked about the yen. So the yen's actually just leapt back through 138. So again, that's biased to the upside. We got as high as it's cooled off a wee bit, but we got as high as 138.38 after the news. That must have been the news. The 330 we followed through. So again, immediate support for dollar yen is there at 138.09. Immediate support. So take care, everyone. Stay safe, and we'll see you all again soon and next time. May the pips be with you, my friends. All the best. Bye-bye.